All right. The show is about to start, ladies and gentlemen. Hope you're all on. Okay, see people start to roll in. Greg, Alex, Jay, Rima, Vicky, how you guys doing? David, Jason, Iman. All right, where else here we got? Sandy, Jay. Whole slew coming on fast. Yeah, this is all new to me, guys, so bear with me. We have more and more people coming on. Great. Anybody had any issues with hearing me? Hopefully not. Give you a minute or two before everybody else starts coming on more and more. George, welcome. Welcome, Jason. Alex, you're on twice. Holy moly. How do you manage that? So I hope you guys know how this works. There's if you guys need to chat, there should be on the right-hand side or somewhere to be able to, I guess, raise your hand so you can chat. Or you can raise your hand. I can unmute you if you need to talk. Let's give it a minute before everybody else comes in. I wonder if there's a way to turn on this music. Otherwise, I'll have Jeopardy music for you guys to listen to. John, welcome, John. Ruslana, welcome. All right. Should be at least 40 of you guys here. Where are the rest of the crew? Anyhow, if they come late, that's tough luck for them. The show should be starting, so I'll get on the ball and get it going. I respect your time, guys. Thanks for coming. And I hope you can take a lot of value away from this webinar today. So this is about my experience, my opinion, guys. So just to understand that, you know, whatever I say today, you can't use against me, can't take me to a court to sue me because you're not getting paid 200 basis points because you don't know how to do it. And what Sue says is his opinion. Got it? So if you agree, you continue to go forward. If not, I would say hang up. Otherwise, the rest of the webinar is all about me. And hopefully you can use something out of this as well to increase your value and increase your income. All right, so how to get the best out of this webinar. If you're coming on here right now and you're in the middle of a file or something and your head is full, stuff's going on, you know, Monday, Tuesday, and roll from yesterday, if you're under stress, do me a favor, okay? Empty it, all right? Take a long breath, inhale, exhale, and let it go, all right? Because if your head is full of stuff, you won't benefit as much as you should when you're attending something like this. I'll go through a lot of stuff, and I may have to go through really fast. So anything that's going through your brain right now, empty it. Half full is better. Half empty, even much better, right? So if you have a cell phone, please put it on the vibrate so that you don't get distracted. If you're on Facebook, Messenger, Hangout, or Twitter, please turn those off because they're a huge distraction. I have mine off, and Lord, I hope it doesn't bug me in between the presentation. So a little bit of disclaimer. Tony Robbins, if you know who he is, he's one of my personal coach right now, mentor. And I've been so blessed to be surrounded by great people to help me grow my business and be able to get out there to be explained and help others to do the same thing. One of the biggest takeaways that I got from Tony and attending all his events is that he has a lot of questions, and I find that I ask a lot of good questions so that I can have a better result. And as mortgage brokers, we have to. And he said it's true. Successful people ask better questions, and as a result, they get better answers. So my thing to you today is ask questions. So if you have any question, feel free to ask, all right? I spent a good deal, chunk of change with this guy, and I spent in a good year. I spent 18,000 on personal development. Well worth my time and well worth my return investment. I made 4 or 5 times back what I spent with these guys. Right? So highly encourage you to invest in yourself and for personal development. So why are you here? I'm certain you know there are a lot of changes and a lot of challenges in our industry, as it has been in the past several months. Not even just saying last couple of years, but you know what? There's a lot of stuff coming down the pipeline too that we're probably not even aware of yet. That may even derail a lot of our business. Even a lot of the online, I guess we call bulk lenders, such as True North, and maybe even Ron Butler's business is probably going to be affected dramatically too, as things have changed. So what are your challenges? Perhaps if you get a chance, perhaps put in your chat box, what's your current challenges you currently have here? And I'll be able to perhaps use that, right? Oh, your underwrite's here, Alex. Okay, awesome. Yeah, and challenges you have, put in the chat box so that I can perhaps cover through my conversation with you on this webinar. Why are you here? Yes, we want we're 100% approval on everything that we submit, right? So get a chance, use the chat box to see how it works. Why are you here today? All right, so why this webinar? For those who are thinking that perhaps Sue might have a hidden agenda, no, Sue doesn't have a hidden agenda. I'll tell you what it is. The program that I offer is a commercial financing workshop. Most of you have already known about it. If some of you don't, just check commercialfinancingmastery.com and you see all about it. I've helped a lot of mentees and a lot of people go through my workshop, make a bunch of money, right? More than they ever did before they met me. So my hidden agenda is this. I will make an offer for those folks who qualify at the end to attend my workshop. There are certain things that I need to know ahead of time before you can be able to enroll in it as well. And we'll talk further about that at the end. So if you bear in mind now for the next hour, it's all about you. So I'll talk a little bit about me, but it's all how you can benefit and how you can grow your business. Okay. So empty that. There's no hidden agenda. I already told you what it is. So don't be surprised. For those folks who are interested, I tell you what, you will want to join and get involved in the program. I guarantee you that much. All right. Now, why I create this webinar is this, because at a time, there's been several instances in the past where I've sent my clients to investors groups, to BMO, to HSBC, and I felt good about it. But the reason why I did it because it's about integrity, and I was able to provide them the product and services that they want, and the loan of value and all that stuff for my investor clients, and had to refer them out. But at the end of the day, I don't work for free. I'm not Mother Teresa, and I'm sure you aren't either. So you want to get paid. And how to do that, I'll teach you a little bit about through this webinar, how to get paid that way. But I did this because I want you guys to know that we shouldn't have a blinders on. We should look everywhere. Our job is to provide the service that our client needs, which is the best mortgage product out there, right? Sometimes the broker channel doesn't have it. So why limit ourselves? When I have sent my clients to HSBC, my client pays me. They'll be happy to, because look what I'm able to get for them. I mean, even today, you can get 2.39% variable with a lot of these lenders on a rental property. Good luck with getting that in the broker channel, because they premium everything up now, right? I did on one of my rental property. I'll talk to you about it in a bit as well. So the other thing is, what's in it for you? So what's in it for you is what I'm going to go through right now. My personal dilemma with this is on my rental property that I had with TD is that they're going to give me a 3.15% variable on 25-year AM, right? And I might even get less because they weren't allowed to use my corporate income. And as you know, a lot of your clients are in the same boat. Some are realtors with a PREC. Their corporate income is what their earnings are. Sometimes they don't take a lot out of their PREC to survive on dividends and all that. And a lot of clients don't take a lot of dividend. They make $300,000, but they only take 40, 50,000, 60,000 of dividends out. If you can't use the corporate income, they're not going to qualify for the $1 million mortgage, are they? Right? So in this scenario, I look at monoline lenders too. They're offer a little bit variable, some fixed rate. If I want to, I can get a fixed rate. But even still, the same situation arises that I can't use my corporate income. And of course, the documents required is horrendous. Thank God we have all of them, but most of our clients don't like it, right? You got to hand in your NOA, T4, T1, T5, pay stubs, letter of employment. Sometimes they want all of it. It's quite crazy. But with HSBC, I got this loan approved at HSBC at 80% loan to value. There was no exception required. They just give me flat out, right? And you get 2.39% variable, so the cash flow is great, and I was able to amortize over 30 years. There was no premium on the 30 years for that situation. So the saving alone is like, just a down payment alone, it's like $53,000 in saving. Plus, they gave me $1,000 cash back, and the appraisal was covered. So all in all, really, you're getting a free legal and free appraisal from HSBC right now. I mean, who doesn't want that, right? Think about it. Which one would you choose if this was your rental property, right? And if you're picking one or two, oh yeah, right. I highly doubt that. Most of us would pick three, right? Because yes, we don't have to charge yourself a fee. But even if you charge yourself 1%, your client the 1% fee, they'll be thrilled. The cash flow loan will kill in the next 4 years, right? The first year, yes, they have to pay you or the broker fee. But look at that. They save in down payment alone. It's well worth it. Ask any investor, would you rather save $53,000 down payment and pay you the broker an $8,000 fee? I'll bet you hands down they'll pay you an $8,000 fee. That's 100 basis point, by the way, if you don't know, right? Easy deal, man, easy deal. So I want to show you how you can actually make 200 basis points or more, right, through this webinar, and be able to show you how to work less and make a lot more money and increase your value over the entire 1 hour here. Quickly increase your value. I mean, most of us, what we trade for is our hour for dollars, right? I want to show you, instead of just trading hours for dollars, I want you to trade hours for thousands of dollars more. Because if you're going to work anyway, would you be interested in making a lot more? Right. So the current challenge inside the broker channel is this. I look at the broker channel, and the girl with the one little prize on the left, that's us. TD, Scotia, they treat us this way, right? We get no special programs, we get no high net worth program, and it's very difficult to get exceptions now. Even my favorite Scotia and TD underwriters, they're getting harder and harder to get done. But yet, slam dunk at the branch level and the MMS is still getting it. Right? How about the limited number of houses, or even better, right? They give you the decline that is highly reliant on rental income. No kidding. My clients have 9 property. I had a client that has 16 properties. All right. And one of my mentees had 27 property. It's crazy. We can't do this stuff anymore for our investors inside the broker channel because of the amount of property they limit us to. And the hoops. How do you like those? Efficiency ratio. So a lot of brokers tell me that they get to shop around for their client. We promote, Dominion Lending Centers, Don Cherry, remember when I was with them, that we shop around for your mortgage and the banks fight for the business. No, they don't. We basically have to beg them to get the loan approved nowadays. That's not how the consumer sees us, but we're professing to the clients that we can shop around. Who says you can't? Your efficiency ratio is gonna drop like a rock, all right? You can't shop around. You're limited to 1 or 2 lenders. That's it. Pick one. I get to shop around. I really do, because I don't have efficiency ratio with HSBC whatsoever, right? CIBC, you name it, BMO as well. And we can't use all the corporate income or any alternative income that's available out there, right? For outside the broker channel, we can use a ton of different type of income. Sometimes we don't have to use some of the income if it doesn't make sense, right? And in the broker channel, expect more rules to come, guys. I don't think this is the end of it, right? So let me introduce David here. David will be coming on board here to help me out through a conversation through the webinar, so that there's some files that I've done with him he'll be able to share with you. And let David read the definition of a mortgage broker here for me a second. Are you there, Dave?
I'm here.
All right. Do me a favor so I can take a sip.
Sure. Hello, everybody.
Hi, Dave. Hi, Dave.
A mortgage broker is an intermediary working with a borrower and a lender while qualifying the borrower for a mortgage. The broker gathers income, asset, and employment documentation, a credit report, and other information for assessing the borrower's ability to secure financing.
All right. That's very succinct, David. So here's my question to you, Dave. Where does it say that we have to use broker channel lenders only.
It does not say that anywhere.
Okay.
But everybody has that impression or that mindset.
Yeah.
And, you know, you and I both hear it all the time from other brokers is, you know, we need to support the broker channel. You have to support the broker channel. And it's true. I do support the broker channel to the extent that they will also support me. And if I've got a deal that the broker channel won't do, I'm not going to turn that deal down.
That's right. And a lot of my clients that I've seen over the past, where in the first 2-3 years, I've moved them to the B lenders, which is like sucks. It makes me feel bad when I know there's something better out there, but I didn't have the resource at the time, right? And the way that I look at it today, my business has totally changed, and you see in a bit why. So I look at commercial financing not as a separate space, a separate industry, separate channel at all. I look at it just as another tool set, another arrow in my quiver, per se, right? So how I can get finance from our clients, get them the best possible. Why set up a, you know, yeah, your client's A- client, but they can get an A lender, just not inside the broker channel, right? So don't settle for less, right? So my question to you is, who controls how much you make? Inside the broker channel, the lender controls how much you make. Here's what I mean. Equitable, Home Trust, anybody, when they get a 1-year term, for example, they got a bad credit or the credit's not so good or the income's not so good, they're stuck in there with them. And you're getting paid 50 bips on the 1 year or even less or whatever the situation is, right? And which is okay. I'm sure it's acceptable to some people, but it's like they control how much you make. Why? For example, or even Home Trust, for example, when you start charging a fee, guess what? They want half of it too. That's just totally unfair to me, right? They're getting paid interest already. So why should they, when you charge your client a fee on top, the client's paying you, and now they want to cut out that as well? I don't like that, right? My question is, why should they control how much you make? Why not you? Right? Makes some sense? And here's how. Right? When you refer, yes, you can refer clients out to the branch and you get paid from your client, and it's not that hard. And I got a broker fee agreement written up by lawyers and all that. It's been okay by our office and everything you can use if you become one of my students. Everything's done for you. But if you were to decide to refer your client to the branch, here's a few things that you need to know. Because I get a lot from brokers that, you know, I send it just straight to the branch because I don't want to deal with it, right? But here's what you don't realize is this. You lose control of the conversation. If it's a good client of yours and just this one time you can't help them, you lose the control. I don't know what they're going to say about you as a broker. I know what the client's going to think about you. It might be good, it might be bad, or somewhere in between. But I know that your reputation with your client is diminished the minute you send them outside the broker channel without any control, right? And that's not good. It's not good for anybody. It's not good for you. It's not good for the whole industry. And that's why I don't believe in referring straight out to some random guy or some favorite guy at the branch. If you do send them out to the branch, I don't know if you guys realize this, but there's so many channels there. There's a few that I just listed here. At the branch itself, the branch advisor is one level, and they have different requirements, different guidelines than the MMS, the mobile mortgage specialist, right? They have different guidelines. Small business lending have different guidelines. There's a separate channel, right? They don't talk to each other. CAM stands for commercial account managers. Those commercial account managers also have different guidelines, right? They don't talk to each other within the branch either, which is a great opportunity. I'll tell you later. Private banking, that's another level, right? It's private banking and high net worth clients. They have a separate set of guidelines altogether. Right? So the challenge is this: when you do refer them out into the branch, right? Do you know about unforeseen problems that may occur? Because I've seen a lot over my time as referring a lot of business out. They have issues, right? So let me go through it so that you can be aware of when you refer clients out. That picture on the left, sheep to slaughter, and here's why. When you refer them out to the branch, you get no representation for your client whatsoever. Not even, they don't know what the heck's going on. They're not mortgage specialists. They don't know what products they're buying, right? They might get the collateral charge. They have no idea what that is. They may sign it for 125% of the value. So what? You might say, wow, I just refer them out. That's their problem. No, it's not. It's your problem because you don't refer them out, right? What if they're being coerced? Like off the records, a lot of my colleagues have been telling me that the up in head office, higher up in management, they want us to sell mortgage insurance. They want to push us to client to make them sign and buy these things. And sometimes they do get away because they say, I can give you the low rate if you sign here or whatever it is, right? Or they can tell you, I can't give you a higher loan to value unless you get the mortgage insurance. Off the records, they're saying that to clients. It's not all written down, but they're telling that. So how does the client feel that when you refer them to that advisor and that advisor is doing this, right? It sucks. If they're poor, never tell you, they never go back to tell you about their experience. But I tell you, it's not as grave as you think it is, just handing it off, right? Why not you control the situation instead, right? And help them with unexpected issues. I had a client that I sent to HSBC, for example, recently. It came back, the appraisal, of course, the market value is all over the map right now, and some are coming down. I had a client that came back to me and said, Sue, the appraisal came back $75,000 below my purchase price. What the hell am I going to do? I don't have that money, right? Think about this. If this was your client and that went to the bank by themselves, how are they going to overcome with this? They got $75,000 they got to come up with that they don't have, right? Luckily, I was in the whole entire situation and I handled it. I call another third party and through Solidify, get appraisal done. It matches the price. I was able to argue all the way up to their head office to be able to send in another appraisal, a different company. And sure enough, it came back and it's perfectly fine. I saved them $75,000 trying to find that $75,000, right? That's what we're paid to do, guys. We're paid to help them all the way, no matter which lender we give to them. Either it's inside the channel, outside the channel, right? Get paid. Doesn't matter who pays me. At the end of the day, I'm getting paid. That's my wife. That's what my wife only cares about, right? Sue gets paid. That's all she cares. Right? If you do send to the branch, remember, not all brokers are created equal, and none of the advisors at the branch level are created equal either. Same with a mobile mortgage specialist. Most of the people that are selling mortgages, this, they're not licensed. Heck, they just finished high school, most of them. Or they graduate from, none of them graduate from any post-secondary education, and they're doing the mortgages for your clients. Wow. I don't want to tell you this story. I don't have time this one, but I've had a situation where same file gets sent to 3 different advisors, okay? On a small little commercial file, 3 different advisors at the same bank. The answer I got back was 3 different answers. And the difference in interest rate and fees were over 1%. And man, oh man, I earned my money on that one, right? So don't even think that because one advisor will be able to do this, they won't be able to do it. They won't be able to, and if you have the time and client has the time, sure, they can go shop 3 different TD bank and get 3 different answers and they get the right one, right? So you pick the lowest one. For us, it is a balance in the end. But here's the thing, your reputation and money is at stake, right? When I originally, years ago, in my first 2-3 years referring to the branch, I felt like the guy with the paper bag on my head because I just like, man, I hope they can be okay, right? I hope nothing goes wrong. And I just feel, not ashamed, but I just like, man, I just felt bad, right? And the whole situation, I just want to hide. And that's not how I want to feel, right? If you feel that way, you know what? Hopefully this webinar will help you so that you can change that. Right? I don't like that. I don't know about you. Money-wise, leaving money on the table, guys, okay? An average deal is about $2,500 per se, right? So we can agree to that. So $300,000 mortgage, 80 bips, $2,500 roughly. So if one a month, you tell the client to go to the branch or you're referring off, you're not getting paid for this. You're basically kissing goodbye to $30,000 a year, right? Most of my mentees that come to my workshops, they told me that I asked about commercial deals. How many commercial deals go through your office in a year? They say about 2 or 3 usually, right? Give that. An average commercial deal for me is around $7,500. So say low ball, $5,000, right? So in a year, you're losing $10,000 to $15,000 if you just dabble in commercial, right? Forget about being specialized and then being expert at it. Think about that. And that's an extra 15,000. So you're talking about 45 to 50 grand you're leaving on the table by referring out clients by not doing commercial deals or something that looks like a commercial deal. Why? That's 50K. Huh? That's a big loss. I don't know. I mean, if you've got a partner, ask your partner, your wife or husband, ask them what they think about putting 50,000 on the table, leaving there. Right? So I won't have time to go through these, but if you go search on the YouTube, you see Thomas' testimony and Joe Mendel's testimonial. What I like is that, I mean, hey, David, can you read Joe's? I just summarized what he says on there.
Yeah, Joe's testimonial. Anyone considering taking the course would be well advised to do so. Definitely a benefit to your clients. Recommended to anyone who is looking to not compete in the same space as 95 or 98% of other brokers out there.
Yeah, I would say 98%. And why I say this is because over the years, I get a ton of referrals from all the mortgage brokers across Canada. It's surprisingly, even the simplest deal, they don't know how to do it. It's a simple warehouse deal. It's like, God, it's as simple as a warehouse deal. It's a townhouse. It's not much complicated. It's not very complicated if you really know about it. So by competing in the same, first home buyer, chasing the realtors, I don't chase realtors. I actually don't do business with most realtors. Most of the time I do business with non-realtors, right? The business I get is not from realtor, accountants, lawyers, and other people, other investors, right? So if you don't want to compete in the same market right now with all the other brokers, I suggest you might want to look at commercial financing and how to finance in the gray area, right? So my solution is this: just do your job and represent your client at the bank, no matter if it's inside the broker channel or outside, right? Because remember, the definition of mortgage broker does not mention anything about your limitation to stay within the broker channel, right? It's just about qualifying the mortgage for them. How you get paid, that depends on you, right? Not on the lender, right? That's what I'm trying to get you to understand. Hey, have a read what Robert Klein's and Ashley for me, David, if you can get a chance here.
Yeah. Robert wrote, I want to give Sua Trong a big shout out and thank you for his training and mentorship. He opened the idea of building relationships direct with lenders on the residential side plus commercial side. 70% of my mortgage business now goes through these channels, which is huge.
So where would that business would have gone in the past if he didn't have access to all these outside lenders?
Yeah, like most of us, the deals probably wouldn't have gone anywhere. He would have just said, I can't help you, and let them go.
Jeez, that's a lot of money.
It's a lot of money.
Right.
And Ashley's, I like Ashley's comment here. If I was better with words, this is sort of what I would have written. You've changed the very essence of my business with your course. I've been operating this business all wrong. With the training and tools provided in your course, I have such clarity in where I'm going. I can't go back to my old ways. I'm a better mortgage advisor that will make more impact in the lives of my clients as a direct result of your course. And I have little doubt that I will be more profitable with more ease than before. And I agree with this completely. The word clarity is perfect for me because that's what this training course did for me as well.
And that's what I'm trying to do. I'm trying to take the blinders off for you guys because it's hard for me to give you everything about my workshop. It takes over 2 entire days, 16-hour workshop to be able to give you in 1 hour. But these are some snippets that I've given you to give an insight of what you can possibly do with your business, right? Change your business, change the way you operate, right? Make more money, work less. I like that better. So here's a file that came to my desk with 3 suites in Vancouver. And this is the challenge that I had with this file. And I'll let you, I'll also tell you a little bit about it, but here's the gist of it. The down payments come from an operating company. The holding company was, the purchase was put inside the holding company, and they wanted a high loan to value as possible. So we got them about $1.35 million. He was happy to even go 65%, but we got them $1.35 million. But the property itself does not debt service. So on a commercial file, you need to debt service or else you need something else. So we're able to use an operating company's income to help offset that debt servicing issue. Operating company, right? How many of you guys have seen this, right? Can I use my operating business? Can I use my operating income? No in the broker channel. And David here learned it the hard way. Tell me about it, David.
This was my very first file that turned out to be commercial. I was a brand new broker. I was still in my first year. And I like the 12 plus there because I think you're being kind as to how.
I always saw on Philogics.
how determined I was to try and get this file done. I was brand new. I didn't know any better. And my conversations with the BDMs, they would say, oh, no, we can't take the down payment from an operating company, or we can't do a deal in a mortgage or in a holding company, or no, the deal doesn't debt service. We can't do this deal. And I didn't take the time, and they didn't take the time to instruct me that all of the things about this deal made it a no-go. They just chose one excuse to let me down lightly with it.
Yeah.
And I had been working on this deal for, I forget the exact time. It was like 6 or 7 days, maybe it was a couple more. I think we had 9 or 10 days for subject removal. And the client was beyond frustrated with me because I assured him I could get this deal done, and I wasn't. And as a last resource, I picked up the phone and I called you with this file. And it was a simple solution.
How long did it take to get that?
From the time that you and I talked, I sent you an email 10 or 15 minutes later with all the documents in it and a synopsis of the deal. And in just under 4 hours, we had back basically a pre-approval or an approval back from a commercial lender to get this done, a letter of discussion.
That's right. Yeah. This discussion letter of interest. And that was it. I mean, we were full package, full executive summary done, written up for them. And they quickly understood what's going on. And yep, makes sense. Done deal. 2.79%.
Yeah,
that's
it
cool
was amazing. And residential rates at that time, a 5-year residential was in the 2.49, 2.59 kind of range. So the fact that we got it done for such a small premium over regular A residential rates was amazing. The client was most intrigued about that.
Yeah, I think they were expecting 4% at the time too when we told them, right?
Yeah, he was mentally prepared for high 3s or even low 4s.
Yeah. So how did the client felt when we told him it was 2% fee?
He was totally fine with it. Didn't blink an eye. He'd had some experience in commercial real estate. He had owned a couple of commercial buildings in the past. So
exactly.
I think he was kind of already prepared for the fee. And when we told him it was 2% of the mortgage amount, he was like, great, who do I make the check payable to? He had no problem with it.
I think you had more issue with than he did.
I did. I had a huge issue with it.
Yeah, when I told you about it, you were balked. I said, what?
Live and learn. I'm a work in progress.
You know, but see, that's the thing. And you saw opportunity. That's why you hooked onto my tailcoat, and away we go. We're having so much fun since then, right?
We have been. This was the first of many, many deals.
Yeah, this is awesome. Anyway, so the deals and the investors and the people of this area, they know each other, and they were been referring you business since then, right? It was kind of cool.
Yeah.
Right? So here's David today. See, that's a project site that we've been doing with a client that has done with us, 3 financing now, at least? Yeah, 3?
We're doing the 3rd one right now.
Yeah. So, it's when you're in a arena of your own, people in the community knows you, and they'll hunt down for you. They'll send you business. They won't go anywhere else. Like nobody else can do this stuff, right? And it's so much easier. And for those people who have been seeing the, what the heck they call it, the tourist accommodation, industrial zone, all these zoning screws up your deal in the broker channel easily, but it can be easily fixed outside the broker channel. I'm biting my tongue and biting my nails from not answering some of the question in I love mortgage broking, because I don't want to get hammered by people saying, you always say that. Well, of course. All right. Like for this deal, right, David, you had this deal. The down payment is coming from the resident, so it's 100% financing.
Yep.
And the picture on there, like on Google Street Map, just looks horrible. It's the picture that's behind the bush, not the church on the left, right?
Yes, it's the one that's tucked way back there in the photo.
Yeah, but you can see this. There's an industrial warehouse right next door.
Yep. Yeah, this was a place in East Vancouver, and it was right around sort of the First and Clark Drive neighborhood, and it was all industrial commercial commercial buildings. There was this little section that was 5 houses in a row, and that was all that was left. Everything else all around it was all warehouse and commercial and industrial type things. Lots of automotive shops and woodworking, cabinet making, all that kind of stuff.
So the zoning wasn't bad enough for you, right, David? You had to find one with multiple suites that wasn't allowed and remediate grow up unit as well.
This deal had so many hairs growing out of it, it was impossible. first big problem was 100% financing. We did an equity takeout on her primary residence, but she didn't have enough equity in there to get the full purchase price of this property out of it. So we had to put some financing on this property. None of the broker channel lenders would look at this property, even tried to do an inter alia between the two. The total loan to value on this property was, or for the two deals we had combined for the two properties, would have been under 50% loan to value if we'd done an inter alia deal. Yeah. And the 3 suites, which was non-conforming, it was a remediated grow up. It was zoned I2, I think.
Yeah, I2.
And it just...
We needed market rents for all 3 units that weren't allowed.
Yep. It was, well, she was getting vacant possession on it. So we had no lease agreements. 1 or 2 of the suites was empty even when she was purchasing it. So there was no real historical rents to go from either.
Yeah. So what we got? We got a lender with no bonus premium.
Correct. Yeah, I actually did this one on the residential side.
Yeah, there you go.
We got 5-year fixed rate A rates from BMO. They were fine with all of the different problems on it. They're like, and it was super loan to value on this property.
Yeah.
It was very, very tiny. We just couldn't get enough equity out of the other.
So you get a 2% on the total loan amount package.
2% on the whole package. It was a good deal.
Yeah, nobody would have been able to get this done. Even if they blindly walk into BMO, they probably wouldn't be able to figure out how to get this thing done at all, would they?
No. If she had just walked into the BMO branch on her own, it's highly unlikely she would have gotten this deal done. It took, working with the branch manager and the mortgage person in the branch, it took a couple of conversations to get them to see the upside of this deal. Yeah.
See, you have to argue and you have to justify and you have to show it in a way that makes sense, right? For them to take on this low risk, right?
Yeah, absolutely.
Yeah. So how would the client be able to figure that out? They won't. That's the issue. She couldn't. I'm trying to say.
No, it was, she had gone through her own bank, which was one of the big 5, but not BMO. And they had declined her. They said, no, we'll you can remortgage your existing house with us. We'll give you lots of equity out of it, but we're not touching this house.
Yeah.
And she had gone to one of the great, big, huge Vancouver-based credit unions, and they had also turned her down on this.
Yeah. So see, so the value is this. You increase your value hugely by being the intermediary person, being able to convey this, to be able to put that summary in place to make sense for the lender to take on the loan, right? Mm-hmm. That's the value. Right?
Yeah, it at first glance, the lender wasn't interested in this at all, and I just dug into it. And one of the points you made a couple of slides back about going to the branch with your client. On commercial deals, typically the branch person and the client don't necessarily have to meet. But on this one, they insisted on a branch signing because it was residential. Yeah. And I went there, I met her at the branch, we went in together, and I just explained to her that I was there to review the documents and answer any questions. And I told the guy in the branch that I was just there looking out for my client.
That's
and
right.
Everybody was fine with it.
See? And I bet you the client was so thrilled that you're there, right?
Oh yeah, she was extremely relieved that I was there. Right. There was nothing weird that came up, but she just didn't understand everything that she was signing.
So she happy to pay a 2% fee?
She was very happy.
Nobody else may get the job done. Heck, 3% she would be more than happy, but you're being nice.
Yeah, and that house is now worth close to double.
Yeah, you go back and ask her for more because the house value gone up. I just being facetious. So here's my story, guys. So I had this investor client. He's bought tons of property through me. I don't know what this is. Probably his 8th property. It happened to be way in Charlottetown a couple of years ago, and it's great when you're in commercial financing. You can do across Canada. No worry about licensing, anything like that. Your mortgage broker license you still need, but you're not restricted to province any longer. The problem with this scenario was it was a heritage status. It was built in 1870. For those who knows history in Canada, I think Confederation was only 3 years before this place was built, right? So it's an old place. It's hard to find any land to get this done with the heritage status. Most lands don't like it, right? The client's a corporate client, so the property is debt service cash flow. The personal client's income is not so high. The challenge with this one is under the $400,000 minimum CMHC loan required for lenders such as CMLS, First National. So there is multi-unit, which is sixplex and up. It qualifies for First National has a division that does these. CMLS does as well. Same with MCAP and pretty much every other lender that we have in the broker channel. They have a division that does apartments and multi-rental, which is a small part of the whole entire commercial financing space, right? So we can't go through them because the minimum amount required. There's an existing 5% assumable mortgage on it with 3 years left, and you know it was cash flowing good. 6% cap is pretty darn decent. Right? It will cash flow easily. So the deal itself makes sense. It's a strong deal. Corporations, down payments come from the corporation as usual. The client came to me, and I was able to find them the lender, able to offer them the 3 year instead of 5% assumable that they had. I was able to offer 3.15, but the guy decided to take a 5 year instead at 3.69, which is okay, right? So I'll go through this quickly by comparing and showing how it was, we create a value, because the current lender gave them an assumable mortgage with 5%, no broker fee, no lending fee. He could have had everything great, but the problem is it lowered his cash flow quite dramatically, right? The second option was to get the 3 year, right? Which is fine. Yeah. He had new appraisal costs, 2 times the legal again, but it did increase his cash flow quite a bit. Right? And it chose option number 3. So when you do financing like this, I offer clients many options so that they can choose rather than just say, I only have one for you, right? Because having one option is not an option, guys. For those of us in broker channel, I'm sure you understand that you only got one commitment letter from one lender because due to efficiency ratios, you can't shop around. In commercial finance, you can shop as many as you like. Sometimes I put in a private lender in here as well to show what it looks like, with an interest-only payment. So this is behind the scene. This is basically what it looks like when I sent this to different credit unions in Charlottetown, Prince Edward Island. So on the left-hand side is basically what I did, a quick summary of the loan request that I wanted to do. It's similar to a private deal already, right? And on the right is what I did for making sure it's cash flow, making sure the DCR is correct. So under the quick calculations there, on commercial financing, DCR calculation stands for debt coverage ratio. You probably know about that. So if the property was higher, he can actually mortgage up to $543,000, right? How cool is that? This tool is available. There's a link to it at the end of the webinar. You can have it. It's free. And it's a quick snapshot. You punch in the information while you're on the phone with the client. It takes about 2-3 minutes punching this information. And automatically, you get to know exactly what the maximum mortgage your client can qualify for on a commercial deal. I mean, how fast can you do that on Filogix? I can tell you, it's not 2-3 minutes. All right. So this tool is available at the end of the webinar as a thank you for sticking around, and you get access to that fully. It's free. Right? So you can do anywhere. You can use your webinar, share screen share with your clients how to go over it to explain to them how it works and all that. Great for investors. They love this stuff. You can play with different scenarios on there as well. All right, where am I? So Bernadette last month enrolled in my certification workshop, and she took it. And I'll just let you hear what she had to say about this, so give you an idea and give me a break to take a drink.
Yeah, we're not getting any volume there, Sue.
Oh man, it's not loud enough. Oh wow. Actually, if I can show screen new share. Wow. Not good.
What I can give to clients, amazing things, especially for my clients who are really wanting to invest in different properties. So I'm very grateful to Suwa for his generosity, his expertise, amazing, like the things that he's given. It just shows how much he really wants to give back to the community. So thank you for all my learning, and I highly recommend all of you to attend his event.
Uh-oh, did I lose you guys?
I'm still here.
Okay, sorry. I thought I lost you guys there. Sorry. All right, guys. Sorry with the technical difficulty there. Hopefully that works. But you know what? Check on YouTube. Bernadette Laxma about her testimony on there. You can see there. But now here's a good point. I want to show you something. Is it possible to work less and make more money? You may be scratching your head. You know, how is this possible? So you know, I want to make more money. I don't want to work more because my family time is important to me and I want to take some time off. Volumes are dropping, so I need to spend more time working. Well, I said, you know, there might be a better option for you, all right? Consider what I have here. This is not just to brag to you and to impress you. It's just to impress upon you my growth my growth in income. The more I invest in the commercial financing and finance a lot of my investors, a lot of my business outside broker channel, it's gone up quite a bit. If you look at even the last 2 years, 2016, 2017, I focused immensely in commercial financing. It went up in 2016, my 2015, my income went 2010 to 300. But between 16 and 17, it went up only by 65,000, which is about 22% increase in income. Now, why is that? Because I work with less clients. In 2015, I had 101 clients. In 2016, I had 80 clients. But in 2017, I had basically dropped about 33% of my client base. What would your business look like if you lost 33% of your clients? All right? Probably not the same trajectory as my income. I can guarantee you that much. I know Ron Butler's business and any of the True North's business, they lost 33% of the client volume. I think it's gonna drop big time. Would you agree? What would your income look like, David?
I don't want to think about that just yet.
All right, I must have lost David. So here's what I said about financing. To me, it's not about whether it's commercial financing or residential financing. It is a matter of finding the source of your funds, right? Whether it's private, whether it's commercial, whether it's residential, it doesn't really matter. Because at the end of the day, is your client wants to be able to get the loan approved and finance these projects that they have or the investment property that they're currently purchasing. And you know, the picture on the top, you can see is the house in the middle of a commercial area. The bottom one in it with a whole bunch of cars in front. This one is right in my neighborhood in Surrey area. It's a house surrounded by commercial and a high rise on the right-hand side. That's the last house standing, by the way. So they cannot finance that on the residential broker channel. Yeah, you probably won't see a lot of this, but this is why the value comes in. You don't have to compete with any broker. You don't have to compete with people who are rate shoppers. I don't get any of that, right? How about the project on the top right? They need $250,000 to get that into the, renovated. Like no lender's gonna give them $250,000 to do a renovation, right? Purchase Plus doesn't work like that, right? Or same with older buildings. It's like very difficult to finance in the broker channel. So when you see a situation where it's a gray area, if you're an expert at it, man, you get a ton of business. It just comes natural because nobody else is gonna be able to do this or want to do it, right? They just waste so much time spinning the wheel, right? So here's what I teach in the commercial financing workshop. I show people how to write up an executive summary. Basically the recipes on the top, on the left-hand side, what it looks like, and how it comes out to is on the right-hand side. This is a very simple one. This client was actually have 2 condos being purchased in the UBCO, Okanagan area, right across from the UBC campus. And the developer website specifically states that it's meant for student housing. It's crazy because anybody trying to finance a residential side, they see that developer website, they're gonna like, oh, you're done. That's it, all right? So we couldn't get this finance at TD Broker Channel. We couldn't get even finance at TD MMS. The mortgage specialist even shook her head out because we couldn't do it. So it was in a holding company, and the wife didn't make much money. 100% of the money that she made, actually, this is her purchase, so it's all in investment property. So 0 real income. This was put in a holding company. This financed by small business lending. Their interest rate was a little bit higher, but I was able to approve both of them at 75% loan to value. So the client was happy, and you know what? They got the loan approved, and she was ecstatic. I'm financing 2 more of her condo units in Surrey soon, right? When that completes. So you can either continue with the status quo and deal with absurd efficiency ratios, right? Not common sense lending. even if they say otherwise. Unfair treatment in the channel, you know, like Scotia and TD, and for us, they don't treat us fairly. Limit access to the products that they have. Unreasonable declines, such as too reliant on rent to income. You know, it's silly. Yeah, they own multiple properties. What do you expect? Can I use my corporate income even though I'm the only sole employee and owner of the company? Or the overkill in the request for everything. You know, pay stub, bank statement, employment letter, T4 and NOA, the whole 9 yards. They don't require that much work outside the broker channel. All right. Yes, I'm willing to support my broker channel lenders. Awesome. I said I tried them first. Doesn't work, I'm done. I don't need to shop 4, 5, 6, you know, broker channel lenders. It's not going to work. All right. So learn to work smarter, not harder. That's what I've been taught. So either continue doing the same thing and face the same result that you've been facing, right? And not being able to do it, get frustrated. Why, right? If you keep doing the same thing over and over again, Einstein says it's insanity. Doing the same thing over and over again, expecting different results, right? Don't. You have a choice. You can become the next superstar in your office, in your community. Heck, in the entire, I would say, franchise, right? There is not many brokers in any franchise that specifically does commercial financing. A head office does, but then you're losing 50% of it, and you're losing any control of your clients. I don't like that. I mean, I want to know what the heck's going on, and answer them in a timely manner. Most of the head office guys don't answer or respond fast enough for our clients, right? Why not you take charge, take the ball, be the superstar, right? Learn how to make money. This is a superstar, right? Noah came to me from Edmonton, and it was in, I thought it was early in April. She called me up and she asked me about my commercial financing workshop. She heard about it. And within a week, she flew in from Edmonton to take my course. And she disappeared off the map afterwards. We have this community page, that private community page, Commercial Financing Mastery, that we share deals, we share updates and other stuff with other brokers, mentees that I have taken over the course. There's roughly over 40 of us there. And we asked what's going on. So she finally responded. She said, she's got a construction file she's been working on. It's $5.6 million. It's great. She made good money. And then I asked her how much money she made. She said, she just laughed and she said that she was highly overpaid. I don't know about you, but last time when I was working residential deals in the first few years, I was not highly overpaid. I was totally underpaid. That's how I felt, right? So it's been a good change. And I won't spill the beans, but Noelle's positioned herself in such an awesome situation where she is taking on a lead commercial financing desk. She's becoming the lead on a commercial financing desk in her entire network of brokers. It's pretty awesome. I can't wait for her to post it live so everybody can share it. But I won't take that away from her. But can you imagine what it's gonna be like? You get a ton of leads from your own office alone is great, but being inside the whole entire network, that's stupendous, I'd say, right? I'll be overwhelmed. So she's gonna have to create a system process to handle all those files that's gonna go through her. Right? I'm proud of her. I'm very proud of her. Right? She's done awesome. And I'll share a little bit more so with some of the other guys, like Tim Armstrong here on the left-hand side. He's killing it up in a small area. I think it's Armstrong. It's up in Armstrong, right? So, oh man, you ever meet Tim online? You see him doing tons of commercial business out there right now. Become a certified commercial finance expert. You basically level up your knowledge by leaps and bounds. If anybody in your office, I guarantee you that much, right? You can increase your client retention because why? They stay with you since you finance the house, your vacation property, the rental property, the Airbnb property, the warehouse, their businesses, they stay with you, right? The more types of financing that you can provide, it retains the client much better, right? They pay more. You're more than welcome to charge 100 basis points, but I usually charge 200-300 basis points now because I'm an expert in my community and nobody else is able to compete, right? Certification, increased credibility. When you have a nice plaque on the wall like Jazz Street there on the right-hand side there, I'll give you a little bit about his success as well. And clients look at it, they assume you spend a ton of time getting the financing, knowledge and all that. It's like have a doctorate degree back on a wall somewhere, right? You'd be able to show like, look, you know, I've done my certification, I've done my commercial financing, so I know what I'm talking about. Right? And just call Sewell for help if you have questions. Hey, and it frees up more time because I have spent way more time with my kids now than I've ever done. And I'm making more money with less clients. Isn't that what you want? Right? This is Jazz Pre. He only did it the workshop about 2 months before he got this deal, right? So he just recently closed one with BMO, and client was paying a private at 9%. I'm sure you guys are familiar with a lot of your clients, the A- clients. So he was able to get a 3.45% with BMO and an extra $200,000, $1.2 million loan, right? None of the broker channel were able to do it. He was able to charge a good chunk of change, and you know what? I won't take it away from him, but he charged less than my 2%, but more than 100 basis points. I tell you that much, right? So he's very thrilled, and I'm very happy for him. I'm expecting him to call me to talk about another deal. So my question to you is, who controls how much you make? Right? You or the lender? I decided to take it on my way, right? And today, less than 5% of brokers know about commercial financing. But tomorrow, I don't know. The next year, I don't know. All right. I'm getting a lot more complicated deals now and taking up more time. You know, I'm doing multi-unit, low-rise projects and development and townhouse development projects. That's going to take a lot more time. So I'm still training this for the meanwhile. The next workshop in Burnaby here is on the 25th and 26th. You can check it out in a bit here. But timing is everything, guys. Right? Not many people is going to be able to do this for a long time. And I'll answer that question a bit, Alex. Timing is everything, right? In the future, I don't know. There could be a ton of us around. I don't know what's gonna be like. But if I get way too busy, I probably won't be teaching this anymore. You know, I'm making $60,000, $100,000 on development projects. I mean, how many webinars do I need to make up for that, or how many workshops? All right, I gotta spend a ton of time doing the workshop, and it's not a great incentive, but it's just my passion. I want to share this information for now, so it's your opportunity to take advantage of it. Because in the future, I might not have this anymore, right? Just think about it. Investment in your personal development is an investment in your future success. Don't invest, nothing's going to change, right? You get the same result. Right? For those people who qualify for a mentorship, and it's going to be a year-long mentorship with me after the workshop is done, so you have full access to me. Just go online. I think I'm gonna put it in here for you to how to get access to this. It's
I'll put in the links for you, Sua.
So COMFEA. If you want to just to see what it takes to qualify to come into my workshop and get trained, have a phone conversation with me to make sure that you're a fit for me, and as well as the program is a fit for you, right? So Commercial Financing Academy certification, I mentioned earlier in the program, costs $49.97. There's installment payments available for those who can't budget it right now, and feel free to make 2-3 payments over time to get it done. For anybody have any questions, here's your opportunity to do it. Next workshop in Toronto is on September 11 and 12. The one in Burnaby is on 25th, 26th. It's a weekend. It's full 16 hours. The tool that I used earlier for the DCR spreadsheet, you can get it from there at the bottom, lenderanalysis.ca/analysis. So I think if anybody have questions, just put in the chat box. I think Alex has a question here. Alex, my goodness, man. Yes, the answer is unequivocally yes. They can buy as many multi-unit family commercial as they want. There's no limit on the commercial side. I deal with lots of non-residents from Vietnam, from Hong Kong, mainland China, some from Iran, Pakistan, all their income from overseas. Like they have no income here. The difference is commercial financing is not solely dependent on your personal income, not dependent on your status, whether you're permanent residence or non-resident. It doesn't matter, right? Berkshire Hathaway owns lots and lots of malls across Canada. Would you agree? He doesn't have PR status. He doesn't have any residency status in Canada, right? So that's just given high level there. And you know what? Commercial finance is not for everybody. Finance outside the broker channel is not for everybody. I get that. But why are we limiting your ability to make money? Why? Why have an excuse to limit yourself from making more money? I mean, I'm able to do it. 40 of my students able to, be able to duplicate my success. Isn't it time about you? Yeah. So, anybody have questions? Feel free to put in the chat box. I'll answer them.
Sue, I'll also add into the chat box the links for those videos, that one for Bernadette that we were having the audio problem for.
You want to what? Say again?
I'll put in a link into the chat box for the YouTube links.
Yep. I appreciate that. I think I'm gonna have to figure a better way to do this next time for that part. Oh, that's yeah, okay. Thanks, David. Yeah, don't take my word for it, talk to Bernadette, talk to Tim Osborne, talk to any of the folks who's taken my workshop. Rahim Lakhani, who's just taken a recent one. Now he's doing more commercial deals that he's usually pushed aside and, trying to get in on the private side. See, a lot of my A- deal and my B deal can be done on the commercial financing, small business lending side. And even clients with very low beacon score. I mean, the record that I've had was a 543 beacon. That was a very low beacon score for a client, had no income from the previous year either. Right. So commercial financing, guys, is an opportunity for you to make more money and to be able to increase your value by increasing your knowledge in a huge way. Like, you have no idea what opportunities out there. I mean, who's a recent graduate, and Beata, she's from, God, it's not Camel River, it's up there. Courtney. Beata is from Courtney, and she's getting several commercial deals come into her office, coming from another office at the Dominion Lending Center, and she's being passed on to her as well. She's going, Sue, before I came to your workshop, I didn't see that many commercial deals, but after this, I'm getting 3 deals already. What's up with that? And I was telling a lot of my students that it's like the car that you're currently driving right now. Whatever car it is, before you own that car, you never saw it on the road, or you don't take notice of it, right? It's our perception. It's our ability to perceive things, pick things out. When we're familiar with it, we pick it up faster. We see it and hear it and more, we take notice, right? So that's why we see more of those cars on the road than before we own one. That's the same thing with commercial financing, is that once you see it, you taste it, you know what it is, all right? What it smells like, what it looks like, or even any deal that goes around my office. I work inside the Remax office, and rarely get referrals from the Remax guys because I'm usually most working in commercial deals. But every now and then I hear some really good development deals or land deals, anything like that. It triggers my ear. I pick it up and I sneak outside and ask them right away, hey, hold on, stop. Tell me about it, right? It's our ability to pick up these things. It's like a radar system, right? So once you know commercial financing, you won't look back, I guarantee you, right? So guys, if anybody have questions, feel free to post it there. Otherwise, I appreciate you for taking the time. Oh, Jardine has a question. Oh, Jordan asks, through the course, will you include contacts of partners that you use for commercial files? For example, commercial will fit being, will of course go over how we can connect with them. Jordan, I have a commercial account manager's black book. I have a list of them. I can probably show you a glimpse of it. I share with all my students, literally. I have all the templates, all the broker fee agreement, incorporation. I have years worth of different agreements, business plans, everything provided from A to Z, and most of it's templated so that you can put your name on it, right? Instead of Sue's name and Sue's company. And all the contacts that I have, yes, you're more than welcome to use my entire list. And I have, let me see if I can grab it from here. Let's see. How come I can't get to that? Okay. So here's basically what I share, Jordan, is I have a list, yeah, tons of BMO people there on the left, right? And I share this with all my students so that they don't have to start from scratch, right? It has everything from all the lens that I've done in the past, you know, and I try to update as much as I can whenever I get new deals. That's what I do, right? I'm not gonna hide anything. And when it comes to financing, I love this stuff so much. There's no reason for me to hide anything, and to help you guys get better at what you do helps the whole entire industry, right? When you contact any of these account managers, you just said, you know, Sua suggests I talk to you about this deal. They know me. They put my files at the top of their basically their inbox because I do everything for them. You know, Bernadette Laxman mentioned about no docs, no talks. I complete a full package deal to them. When they see it's coming from Sua Trung or any of his students, they put that as a priority because they know everything's done for them. All they have to do is review the summary. They don't have to look into the supporting documents most of the time. And then they send it straight to a credit adjudication department, get it approved. It's, you know what? It's for us to grow and create a huge value gap so we don't have to compete with the MMS. I don't see them as competition. Most of the time, I see them as colleagues because they send me a lot of files that they can't do it too, right? Probably around 25 to 30% of the business that I get on the residential stuff, they come from my commercial account managers. It's an opportunity I mentioned earlier. Here's the coolest thing. You guys don't realize this, that the MMS, small business lending, commercial account managers, the private network, you know, the high net worth people, all those channels don't communicate with each other. There's no incentive for them to go down. Commercial account managers do not send down to the residential files to the branch because they don't get paid. So what they do is they send it to me because, you know what, I treat them out well. I treat them and their spouse out well. That's all I gotta say. You know, it's no kickbacks, but you know, I provide a lot of nice gift, and they love it and they appreciate it. The branch people don't provide them anything, right? Except grief, if anything. So I'm able to help them in such a high professional way, and I'm able to train you guys at the workshop to do the same thing, to reposition yourself as one of the ambassadors, and they send you the business instead of just saying, so I can't help you, go to the branch, right? They send directly to me, right? And when you get a commercial account manager sends you a residential file to you so your team can handle it, what's the likelihood of them shopping around for rates? Think about that. Okay? Not at all. They will not shop around. My RBC guys send me the residential file because I send them commercial files over the years, right? If I don't do it, I don't have time to do it. My team does it. I get paid, right? They're not going to shop around because, you know, so-and-so told me to talk to you. That's it. That's the end of the story. Yeah. So I don't know. Hope you guys got some value out of this. And if I see you and you're interested, you know, check in the, what's my link? The past one. Yeah, just go to the, is my post, Kalani.com there, Brokers with Soul /COMFEA, COMFEA for Commercial Financing Experts Academy. And then we have a nice strategy session. I was talking about the workshop itself and see what it takes. For those who qualify to come to attend our workshop and get trained in commercial financing, expect to have a nice ride ahead of you, right? Very exciting. But I appreciate your time, guys. So it's a little bit over an hour now. So if you have any more questions, I'm more than happy to answer you. But hopefully that answers your question there, Jade. Yeah, you don't have to start from scratch, my friend. Most of the stuff is done for you. But I can, and I also show you how to reach out to a lot of the commercial account managers and the senior account managers as well on the workshop. There's a process that I go through. It's pretty cool. They'll buy you lunch, you know, Cactus Club, you name it, Brown Social House. It's such a different world, my friend. It's not these donuts from these BDM. Nothing wrong with Tim Hortons donuts, by the way, but I prefer Brown Social House lunch rather than, you know, a couple of donuts from Tim Hortons. Yeah, it's not good for me. After a few donuts, not too good anymore, Jody. All right. So anybody have questions? Feel free to reach out to me. Yeah, Google me. You'll find me easy enough. I'm very accessible. I make it easy to do business with me and work with me. I'm more than happy to mentor and train you guys because I would rather see our industry grow and be the go-to financing expert and not be treated like a car salesman. We should be better, right? And by adding the commercial financing aspect and be able to finance everything under the sky, under the sun, it broadens our level of expertise and also our reputation in industry. Yeah. Okay. Oh, did someone have some other Q&A? Okay, Craig. Yeah, if you're interested in the workshop, Craig, just connect with me on the calendar. Have a nice conversation, and we'll go from there. Anybody have any questions? Email me. Okay. Sewell@sharingbanksecrets.com if you don't have that email address. Pretty easy enough. Yeah, it's an old website I have around for years, but I haven't used. My YouTube channel, guys, there's really over 100 videos out that I've created for almost everything that I've talked about. Different aspects of commercial financing. That's a good start if you don't have the money to attend my workshop, and or if you're too new. Okay. Look forward to seeing you in my next workshop, guys. Take care. Have yourself an unbelievable day, and see you all at the top. Take care.